So, have you ever really stopped to think about what happens to your money after you drop it off at the bank? I mean, it doesn't just sit in a vault, right? Nope. It actually enters this huge, complex system that's designed to put it to work. Some people even call it a financial harvest. In this explainer, we're going to peel back the curtain and break down exactly how that system works, step by step.
Wow, a resource being harvested. I mean, that's a pretty intense way to think about being a bank customer, isn't it? But what does that really mean? To get our heads around it, we've got to follow the money. We need to see how this whole thing is designed from the ground up.
All right, first up, your money's secret journey. To really understand this whole harvest idea, we have to trace the path your money takes from the second it leaves your hands and enters the banking world.
Okay, so at the absolute heart of everything is this concept called fractional reserve banking. You can think of it as the engine that makes the whole financial system go. It basically means the bank doesn't just hoard your cash. Legally, they only have to keep a small piece of it on hand, a fraction. And the rest, well, the rest gets put to work. And this little diagram shows you exactly how it works. Let's say you deposit $1,000. Under the system, the bank might only have to keep, say, $100 of that in its vault. The other $900, they can immediately loan that out to somebody else. And that person now pays the bank interest. So just like that, your single deposit has been multiplied and is now making money for the bank. So the bank is using your money to make more money. Makes sense. But what's the catch? What's the price that you pay? Let's take a look at a couple of the hidden costs that are baked right into the system for the average person. And here is the absolute key. Think of it like this. There are two things happening to your money at the exact same time. On one side, you've got your cash sitting in your account where inflation is just silently eating away at its purchasing power. Every day, it buys a little bit less. But on the other side, the bank is using the loaned out part of that very same money to actively make a profit. Your money is losing value while their version of your money is making more. Now, here's where things get really, really interesting. Let's shift gears and talk about credit. Specifically, let's talk about a very surprising nickname that some people in the credit card industry have for their best customers. Yep, you heard that right, deadbeats. If you are one of those responsible people who pays their credit card bill in full, on time, every single month, well, from the bank's point of view, you're a deadbeat. And why? It's simple. You're not making them any money from interest payments. This just pulls back the curtain on the whole business model, doesn't it? It's not really designed to reward you for being good with money. It's designed to profit from people carrying debt. Okay, so that brings us to a really important part of this story, the wealthy's secret weapon. Because you see, wealthy people don't just participate in this system of debt. They've figured out how to flip the entire thing on its head and use it to build even more wealth. And this chart just lays it out perfectly. It's like a tale of two different worlds. For most of us, debt means high-interest credit cards, car loans, things for consumption that make our wealth go down over time. For the wealthy, debt is a totally different tool. It's a low-interest loan they take out against their assets, like their stocks, and they use it to invest, which makes their wealth go up. So just how low are we talking for these interest rates? Well, get this. We're often talking about something around 4%. Imagine getting a loan for just 4%. And here it is. This is the secret weapon. Instead of selling their stocks or property to get cash, which would mean they'd have to pay a big chunk of taxes on their profits, they just borrow against those assets at that super low interest rate. So they get the cash they need, their original investments keep growing in value, and they legally sidestep a massive tax bill. It's an absolutely masterful way to make the system work for you. So let's do a quick recap of what we've uncovered. We've seen how banks take your deposits and multiply them into profitable loans. We've talked about how inflation is a silent tax on your savings. We learned that the credit card business model thrives on interest from people who carry a balance. And finally, we saw how the wealthy use the very same idea, debt, but as a powerful tool to build wealth and avoid taxes. So what's the big takeaway here? Look, this isn't about getting cynical or angry at the financial system. It's about being smart. It's about being clear-eyed and understanding how the game is actually played. Because once you understand the mechanics, you can start making the system work for you instead of the other way around. So knowing all this, the real question is, how are you going to see your bank tomorrow?